Hey everyone, thanks for tuning in today. I want to kick things off with a straightforward observation. December 2025 is going to reveal the gap between what a lot of silver enthusiasts are hoping for and what the actual situation is likely to bring. For quite a while, you've been hearing that silver is a bargain, undervalued, a shield against inflation, and a financial asset that still doesn't get the attention it deserves. And you know what? That's all spot on. But here's the catch. Just because something is really inexpensive doesn't mean it will meet your expectations. It simply suggests that those expectations might be ahead of the actual changes. Let's break down what I'm seeing. To begin with, the basics. The industrial appetite for silver is still strong due to green energy, solar power, and electronic components. Meanwhile, the supply is tight and mining challenges are ongoing. Issues with byproducts are flaring up too. On the flip side, the monetary interest is growing, yes, from silver enthusiasts, but also from institutions starting to recognize silver as more than just a backup to gold. To sum it up, silver is quietly setting the stage for a significant breakout, but just having the right setup doesn't guarantee excitement. We need a catalyst, and that catalyst is likely to show up in December 2025 as various pressures come together. The US dollar is losing strength. Unexpected inflation is hitting. Consumer confidence is shaky. The Fed is hinting at changes. Riskier assets are unstable, and investors are looking for safety. Silver, still not widely owned compared to gold, and lacking the intense speculation seen in the gold market, is in a unique spot. The short positions, the hidden demand, and the general unawareness of many are all in waiting. And here's something that most stackers don't get. This isn't going to be a smooth journey. A lot of folks are stacking silver thinking, all right, this will slowly go up in value. Nope, this is going to be a shift that really rattles you. Because when the market catches on to how significant the mispricing is, when the short covering kicks in, when the actual demand surpasses the available supply, and when the momentum shifts towards metals, it's going to be quick, unexpected, and ruthless for those who aren't ready. Stackers who think they're secure just because they already have silver might find themselves underprepared or too late to react. So, what's the game plan right now? You need to take a good look at your position. Ask yourself, am I properly balanced? Am I set for what's coming, not just what's anticipated? Am I mentally equipped for the ups and downs? Because they're on the way. December isn't just another month on the calendar. It's going to be a turning point for silver's story. And to anyone who brushes this off as just fear tactics or hype, I have to say this. The markets don't care about your comfort zone. They focus on imbalances. They pay attention to flows. They watch behavior. And at this moment, silver is showing more of the right kind of behavior than most folks realize. All right, folks, get yourselves ready. Don't let yourselves get too comfortable. Understand that the journey ahead is huge, but the opportunity is limited. By the time we hit December 2025, we'll see who was stacking silver and who was ready for what's on the horizon. To wrap things up, if you see silver as a safeguard, a key metal, or an asset that's undervalued, that's great. But just believing isn't enough. You need to act quickly. You have to be aware of your positioning because the scale of what's coming requires you to be prepared. December won't hold back for those who aren't ready. Let's dive right in. We're not just discussing silver as another tool in the investor's kit. What we're witnessing is a fundamental change, the kind that doesn't just hint at things. It screams, silver is on the brink of something much larger than most people think. And I'll explain why that's significant. First off, let's talk about the demand from industries. Silver isn't just sitting around waiting to be collected. Its applications are growing rapidly. From solar panels to electric cars to gadgets, silver is woven into the fabric of the economy of the future. This means its importance goes beyond just being a way to save or a safety net. It's a crucial part of the production machinery. A lot of investors still see it as an old-fashioned artifact, but in truth, this metal is becoming increasingly vital. At the same time, the supply is facing challenges. As one analysis noted, the record demand for silver worldwide, combined with a lack of supply growth, led to last year's market shortfall. Shawnee Feed Fund 3 Shift EGGold.com free. This isn't just a coincidence. Next, consider the demand for a monetary hedge. When fiat currency systems start to wobble, folks naturally turn to assets that have stood the test of time. Silver has been that reliable option for centuries, often overlooked by many, which, ironically, gives it an edge when an asset isn't in vogue. The potential for growth tends to be greater. Recent insights highlight that silver presents a lot of upside, with very little downside risk. The Jerusalem Post reports that investors who have jumped into gold believe they've done enough for now, but the real chance might actually be in silver making a comeback, especially with Ray Dalio's warning about market changes speeding up. Thirdly, we have the distortions in the paper market. A big part of silver's market is still under the influence of derivatives, speculation, and macro bets, which creates a leveraged situation. When you add in the real physical shortage, like we've seen with significant short positions or under-owned long positions, you open the door for a sudden squeeze. A recent analysis suggests that silver's breakout, along with the unwinding of the long gold, short silver trade, is starting to show. The motto on YouTube is relevant here too. This isn't just about silver slowly creeping up. It's more like a situation where big upward movements happen and leave many people behind. So, when you tie together those three elements, rising industrial demand, increasing hedge demand, and underlying supply market distortions, you end up with something that's not your typical commodity situation. You're looking at a major shift. This isn't just about whether it'll happen this year. It's more about when and how significant it'll be. Since the underlying issues are genuine, supply can't just ramp up overnight. Demand is already on the rise, and the investment crowd is just starting to realize that silver isn't just gold's little sibling. It has its own unique narrative. Here's the twist. A lot of silver enthusiasts think that by having physical metal, they're all set. But if the upcoming changes are sharp and structural, just holding some might not be enough. It's crucial to be properly scaled and mentally ready, because when supply gets tight, when industrial demand surges, or when monetary flows shift, the market tends to react quickly. In fast-moving markets, being underprepared or too relaxed can cost you. To sum it up, this isn't just about silver potentially rising because it's cheap. It's about silver breaking away from its historical constraints and stepping into a much larger story, one that's been set in motion and is primed for takeoff. If you overlook the gap between supply, industrial needs, hedge requirements, and market irregularities, you'll eventually reflect and think, I sensed something was off. However, the savvy individuals will say, I took action on it. The groundwork is set. Now it's time to acknowledge it, not just as a quirky gamble. You mentioned the tipping point. What exact catalyst will come together in December? A dip in the dollar's value? Unexpected inflation could surprise central banks or lead investors to flock to precious metals. Investors covering their shorts could trigger a significant shift. Let's explore why silver might skyrocket in late 2025. In 700 words, without a title, using a tone similar to Charlie Munger. But let's not start with the dollar. When the US dollar takes a hit, precious metals usually surge, not because they have some kind of magic, but because the alternative fiat currency loses its appeal. In the coming weeks, the dollar is facing challenges. Rising inflation, diminishing trust in monetary policies, and aggressive government spending are all putting pressure on the greenback. As trust in the dollar starts to fade, money tends to shift towards things that have real value. and silver is right in the mix. Being one of the metal safeguards, it's poised to gain when the dollar starts to falter. Then we have the second surprise of inflation. The current situation is ripe for inflation to catch us off guard, whether it's due to rising wages, energy issues, supply chain messes, or government spending. When inflation numbers come in higher than folks expect, interest rate paths often change, and yields might remain low. Real yields can dip into negative territory. This makes the argument for holding on to non-yielding assets, like silver, even more compelling. In such a scenario, investors think, I need to protect myself now instead of waiting. That urgency is what transforms a slow climb into a swift surge. Lastly, let's talk about the movements from central banks and big institutions. Historically, these large players don't spring into action the moment a breakout occurs. They tend to react when they feel one is just around the corner. The cue for them to take action usually arises from a mix of stress, fluctuations in currency, geopolitical uncertainties, and surprise inflation. In December, we're likely to witness more of these cues, leading to increased investments in precious metals, exchange-traded funds, physical metal acquisitions, and a shift away from traditional assets. When big institutional players adjust their investments towards silver, or at least towards heavy metals in general, it creates a ripple effect. The volume of these investments is significant. Just small retail buying doesn't influence the markets like a substantial institutional shift does. Next, we have the structure of paper markets and short covering. A lot of investors fail to realize how much of the silver market is still controlled by paper derivatives, futures contracts, ETF holdings, and leveraged positions. If the fundamentals of silver start to show signs of weakness, and hedge funds or speculators find themselves in short positions, the unwinding of those positions can speed up the movement. Once the short position begins to squeeze, you witness a chain reaction as short sellers start to cover, with physical metal becoming increasingly difficult to obtain and the delivery premium climbing, prices soar. This happens in December. When one or two of the main drivers occur at the same time, the trigger often lies within this interaction. The short side takes a hit while the long side works to establish itself. Next, sentiment shifts. Public expectations have typically been rather relaxed. Silver is inexpensive. It'll rise gradually, but when the outlook shifts to the possibility of silver taking off, that's when the positioning changes. In December, if the general public and professionals transition their mindset from maybe to definitely, more capital will flow in, and that influx itself acts as a catalyst. This psychological change is significant because markets are reactive. When folks start to think they're behind, they jump in, which only amplifies the movement. So when you put all these factors together, weak currency, rising prices, unexpected events, significant investments in gold and silver, short covering, and changing attitudes, the outcome is a gradual shift. The movement becomes intense and the time frame short, because the market doesn't linger indefinitely waiting for everyone to agree. Once several trigger points align, momentum picks up fast, and anyone who didn't jump in early is left rushing to catch up. So if you're on the sidelines hoarding silver thinking, I'll buy later when it's clear, you might realize that what's clear is already in the past. December isn't just another month on the calendar. It's the time when all these pressures start to amplify one another. The metal shifts from being undervalued to being underrepresented, and in that space lies the significant movement. Now, there's no promise of perfect timing. There are always factors at play, and maybe some catalyst will shift things earlier or later. But the reasoning is straightforward. There are structural imbalances at work. The environment for triggers is taking shape. The market is gearing up for a significant shift, and December seems to be the prime time when everything comes together and the excitement ignites. If you're really looking to get ahead of this, you need to start preparing now, not once the action kicks off. When December arrives and those key factors start to align, the market won't wait around for anyone. The moment will happen, and those who are prepared will reap the rewards. Meanwhile, those who sit back might just find themselves watching from the sidelines. To put it simply, this isn't a gradual change. It's going to be explosive. And December 2025 isn't just a possibility. It's the month when several triggers will align and real change will take place. It's time to act not only with confidence but with a sense of urgency. Let's dive into what many silver enthusiasts might be overlooking. The risks and the opportunities, laid out in a clear way that reflects how I discuss markets. This is more significant than you realize. And if you're not ready, you could end up regretting your inaction. You picked up silver because you see it as a safeguard, a way to protect yourself, and a tangible asset against inflation. That's great. However, just having silver doesn't mean you're fully ready for what's coming. The potential here is massive. Absolutely. But so are the risks that come from not being adequately prepared. First off, let's talk about the opportunity. Silver is still not fully valued, especially since many people haven't considered what might unfold when various factors come together. When the value of money drops, inflation hits hard, the dollar weakens, industrial demand surges, and supply stays tight, silver isn't just going to rise. It could skyrocket. This means that if you're in the game now, you're not merely acquiring a metal. You're gaining options. You're seizing the chance for something significant to happen while you're already in the mix. This isn't just a little upside. We're talking about big multiples here. And yes, this is exactly what you were aiming for when you started stacking metal. It's that rare moment when the story aligns with the real value. Now, let's consider the risks involved. A lot of stackers believe, I have silver, I'm secure, I'll sleep well. But that's a risky way to think. Why? Because feeling secure only works if your expectations are low. If the upcoming change is significant, being modestly invested turns into being underinvested. If you think silver will slowly rise and it actually skyrockets, your portion of that increase could be minimal. Even worse, if you believed your storage plan's liquidity or access to the metal was enough for regular situations, you might find it lacking during unusual times. In a breakout scenario, access costs go up, premiums increase, selling becomes trickier, spreads widen, physical silver gets harder to find, and if you try to ride that wave without being ready, you risk being late or having to pay more than you anticipated. Another concern is getting too comfortable in timing. You stacked when silver was inexpensive. That's just part of the equation. But the upcoming surge might not wait for you to decide to invest more later. The market could change while you're waiting. If you're just sitting around waiting for that confirmation, you might find yourself watching the train pull away from the platform. And let me tell you, when the big players start moving, when those shorts get squeezed, and when industrial demand takes off, the market can change quicker than you can imagine. By the time you catch on to that opportunity, it might already be out of reach. Then there's the mental aspect to consider. Thinking of this as just another commodity can really limit your perspective. If you assume silver will behave like a typical commodity, you'll be caught off guard when it doesn't. When metals turn into monetary hedges and markets reevaluate entire asset classes, the speed and intensity can throw traditional patterns right out the window. If you're only gearing up for a 10 to 20% shift, but 100% or more happens, you'll be caught flat-footed. So how can you prepare yourself ahead of time instead of reacting after the fact? First off, adjust your investment based on how confident and ready you feel. If you think this moment is significant, you need to see your silver stash as more than just a side investment. Turn it into a main hedge. Next, make sure you have access to liquidity. Having the physical metal on hand is crucial. You want to keep your silver where you can easily get to it, with options for delivery, secure storage, and manageable premiums, because when things get hectic, premiums can go wild. Then take a look at your timing and how much risk you can handle. Are you prepared for some ups and downs? The quicker silver moves, the less opportunity you'll have to add more later. If you're in for that ride, you need to strap in now. Lastly, shift your mindset. Understand that this isn't about a slow and steady approach. You're aiming for a breakout. This means your risk management strategy has to adapt. The downside is limited. You already have some, but the regret of not investing enough can be huge. In a nutshell, the opportunity is enticing, maybe a once-in-a-cycle chance. The real risk isn't that you'll lose it all. The danger here is that you might end up with way less than what you could have gained. Or you could end up paying a steeper price down the line, or even find yourself on the sidelines while others are riding the wave. A lot of folks will wake up in December and say, "I was stacking, I was playing it safe." But they'll miss out on the bigger move because they treated silver like a slow-moving insurance policy instead of a strategic, event-driven asset. If you genuinely believe in the upcoming significance of silver, take action now. Don't wait for the obvious signs. By that time, it might already be too late. Final thoughts and predictions for December 2025. Position yourself wisely. Scale your investments appropriately. Get ready for some bumps along the way and be prepared for surprises, because when they hit, you want to be the one who took action, not the one who wished they had. So, as we find ourselves on the brink of what could be a pivotal moment for silver in years, keep this in mind. History doesn't reward indecision. It rewards those with conviction. Every significant shift in wealth tends to catch most people off guard, not because the warnings weren't obvious, but because they chose to overlook them. At this moment, the alerts are flashing all around us. The strain on currency, the pressure from inflation, the increasing skepticism towards paper promises, and the tightening hold on real, tangible assets. Silver isn't just sitting around waiting for a green light to move. It's waiting for acknowledgement. And when that acknowledgement finally arrives, it'll be too late to secure positions affordably or easily. You can either be the investor who anticipated this and got ready, or the one who later shares the tale of how you nearly acted. The decision isn't made in December, it's made right now, because when everything settles and folks look back at December 2025, they'll split into two groups. Those who took action when it counted and those who regret not doing so. The window is open, but it's closing quickly. Take action before the market forces your hand, because the greatest opportunities in history don't come with a fanfare. They arrive quietly just before the chaos starts. And that sound is on its way. Charlie Munger can mess up sometimes. Verify crucial details.